Well, thank you for coming. Sorry for the slight delay on the presentation. So obviously I'm SC Trading. We were just having a quick chat as we were walking up. Basically SC Trading is basically just myself as a FX trader. It's not an educator. I don't provide as a normal seminars. This is obviously my first. I've done a few webinars for Pelican. They've asked me to do a few, which has been good. Obviously we'll have a chat about Pelican later and the application and how great it is. And I wanted to basically talk about myself a little bit, which sounds a bit self-serving, but I think that talking about how I've got here, obviously stood in front of yourselves, shows a good journey, and also I think relates to people actually trading on their own, either semi-professional, professional, in their bedroom, in their home office. And basically how it started was I was in a printing firm, so I ran my own printing firm for 12 years, and I left that printing firm basically because no one ever paid us. So that's basically why I left. But I loved the printing firm because I had a different hat every day. I was a marketeer, I was a sales guy, I was an account person, and then obviously I was a physical printer. So I enjoyed my role there, but obviously it was very difficult as we got into account management. So I left. Didn't know what I was going to do, thought I might be a basically sales consultant, and I actually went to work for my friend who runs a commodity brokerage in the city, a really small one. And basically, very long story short, he just said to me, do you know that you can trade FX on your own? And I said to him, well, I didn't know that. I thought you had to be within a prop house or within a bank. And he said, no, you can go on IG Index, as it was named at the time. You can put a bit of money in and you can trade. So I put a few £1,000s in, started to look at all the markets. I did pretty well, turned into tens of thousands, thought I was, the bomb. I thought I'd absolutely made it. And, same story as, many people, I lost it all. And I lost it quicker than I actually gained it. But at that time, so that was back in probably 2009-ish. And basically I said to myself, do you know what though, I actually quite like this trading lark. So I was in a fortunate position. I took a year out, I went away, I read everything I could, I found some people on the internet as educators, read articles, and basically I found that technical analysis was my sort of trading. So I went off and got professionally qualified as a TA, and then basically I started trading. And the reason I bring that boring long story up is that I never actually wanted to be a professional trader. What I wanted to be is the lifestyle of a trader, as in
No, you have to come this way because you want to.
Oh, am I not on there?
Yeah,
Sorry.
we're can't see.
So
I'll give you directions.
is it a chair? So the story is relevant because I didn't want to be a professional trader. I wanted to earn a living from trading. But I think that story of how I wanted to learn to trade for a living has helped me become a very good professional trader. So I think that process really leads into what I'm actually going to talk about. And obviously we're going to talk about rebooting. I apologise that it's slightly off. It was fine. I blame Peter. So I think this leads into myself being, a good professional trader. But I think it's because it comes from my background of I wanted to trade for a living and I wanted to earn money and have a nice lifestyle. Now we'll get into that as well. And I'm not talking about sitting at a beach with a laptop with a margarita, because that is a load of BS. That does not happen. But what that leads into is basically how I work. And you may be a little bit shocked of a few things I might say this evening, because how I work is personal to me and it will be personal to you. So me standing here and telling you about how I trade actually is completely irrelevant to everyone in this room. You need to go away and take the bits that work for you, and you might need to try and test them and going that doesn't work but this works. But it's about building a philosophy around your trading, not my trading. Who cares what I get up to? My trading works for me. You need a little bit of my experience to tell you to make your trading work for you. So it's about building the philosophy, and I hope this presentation will give you a little bit of an insight into basically what you would need to do. And then again, that leads on to the reset. And the reset is about being a consistent trader. It's not about making money. And again, as we get further down the line, we'll get into the money side. It's about being consistent. Because anyone in this room, like I've done, like many traders have done, can put in a few £1,000s, can turn it into 10 grand, and think they're the best trader in the world. And I'll tell you now, you lose it within the next 6 months. Obviously, you can stop with your 10 grand and be happy. That's absolutely fine. And people want to do that, you know, fair play to them. You know, I'm not disparaging people who do that, but that's gambling. You know, that is going down to the bookies, putting money on, making some money, going really happy with that. Did it on the football actually personally the other day, and happy with that. But I'm not going to go back down to the bookies again, because that negates the point of gambling. So this is basically, I just want to get into all this, and we're even completely off. Amazing. It's lovely on this screen, by the way.
So I'll have a quick look at it.
Yeah, go for it, if you don't mind. So basically the reset, and I wanted to do this in the summer. It's very kind of obviously Pelican to ask me to do this, because it's the perfect time. Because liquidity is low, which means volatility is high, and again, trading is contradictions. So you might think, volatility is high, that's an amazing time to trade. No, it isn't. You want to trade when your strategy and how you trade works well. And if that works in really high volatile times, then obviously, again, that's absolutely fine. But you have to be aware of the market that you're trading in. So in the summer, you have to be very aware that the volatility is high, and that volatility is wild in the sense there's no control over it. So when you, I don't know, say we're in November and all the traders are back at their desk and there's really high volatility, you will know that volatility is controlled because all the traders at the desk, the liquidity is, you know, big, everyone's doing their stuff, it's good. The liquidity and volatility, the volatility being high over the summer is wild because there's no one controlling that. It just moves because there's no one in the market. So again, you have to be aware of that. So I think this is the best time. It's such a broad topic, trading. I found it very difficult to cram in what I needed into this hour-ish, because it's just so convoluted trading that I have basically a thought process, and then I go off on a tangent because it links into this and then it links into that. It is so multi-layered, and it is very difficult to trade well. And again, we're going to talk about consistency because that's the most important thing. And I think that, you know, me standing up here again telling you about trading, it's very difficult to boil that down into specifics. And if anyone ever stands up in front of you and goes, I can tell you how to trade and these are the points, again, load of rubbish, because it is so multi-layered, there are so many facets to it, it's actually really, really difficult. So if we move on to the 4 parts of trading, which are probably the most important. And again, you might be surprised that I'll stand here for an hour, and I won't even mention trading, because trading is the least important thing in trading. Sounds, again, silly, you know, some people obviously may know that, but pressing the button of trading is the last thing I think about. The absolute last is not important. The most important thing is trading psychology. And actually within that, it's patience, which again we'll get into, but it's trading psychology is the most important. Below that is trading discipline, overall discipline, and routine. They are the second most important thing. Third is your trading strategy, and then finally what I call the art of trading, which is physically pressing the button, you know, where you put your stop, where you have your target, what trades you take. So, and I'm basically not even going to mention trading charts, anything, because it is completely irrelevant. So to move on to the actual topic of resetting your trading, basically we're going to start with expectations. I've personally learned that people's expectations in trading are completely out of this world. People expect to make 10, 20% a month in trading from their office, which is just out of this world. An asset manager is her or his right arm for 10% a year, never mind 10% a month. So people's expectations are just way out there. I'm not saying that you can't make 10% a month. What I'm saying is that your expectations you have to go in have to be a lot lower. You are obviously here to, enjoy trading because you enjoy it, you want to make money, and you want the lifestyle. But that lifestyle is actually a lifestyle of choice and freedom, not a lifestyle of being on a beach, as I mentioned. So you're not going to sit on a beach, you're not going to have a Mai Tai on your laptop. You need a couple of screens, you need the discipline, which we'll go into, and you need to be there a long time. I sit in front of my desk 15 hours a day. Now, don't get me wrong, I'm not digging a ditch, so it's not really hard work. And yes, I do have, an hour off for lunch, and, I can, if I'm feeling fast, I'll go and watch a bit of TV or go and do some walk around the park, So again, that's the lifestyle aspect. It is not, the concept of that you can just go into your computer, do a bit of trading for half an hour and make loads of money. Again, maybe slightly controversial with it, but anyone that stands up in front of you and says that you can make money from trading, within a few hours is completely wrong. Now, again, that does not say contradictions trading. They're not saying you can't trade part-time. Of course you can. But there's a process to your trading part-time. And again, hopefully we'll go into some aspects of that. But you are not going to get up in the morning, have half an hour while you're eating your toast and the kids are running about, put on a few trades and you come in and you're £1,000 up. May happen, but in the long run, it's not going to work. Giving up your job, that is completely possible. Obviously, I gave up my job, I'm now a trader. But the process of you're going to do it overnight, again, is not going to happen. I'll say this is the next one. It's not going to happen overnight. It's going to take a long time. It's a slow process, and people don't want to hear that. People don't want to hear that you actually have to work at trading. There's the terrible part of our industry where basically people think that you can just go on, make loads of money, and you'll be out, and it'll be really amazing and easy. All these Instagram people you see, with all their money and all their cars, well, they made that through education, not through trading. And you can make money overnight. Again, contradictions in trading. I'm not saying that you can't, with a great attitude, go in, put some money in, make a load of money, close out your account, have a chunk in the bank and in your savings, and you're done. Of course, but that is the definition of gambling. And you can do that. And if that's how you want to trade or use trading, again, there's absolutely nothing wrong with that. And again, another contradiction. If someone tells you that's bad, well, actually, it isn't bad. As long as you recognise, what you're doing. You are gambling by using the Forex markets. That's absolutely fine. But so, we have the expectations and your aims, which, need to be tempered. But then we need to get into, again, very difficult, but accepting losses. And the whole point, basically, which we'll go into, is basically mindset. And basically, you have to be able to deal with losses. Because, again, with the gambling side, if you go into a bookies and you put your bet on and you lose, well, then you're okay about it because, you are losing money. It's absolutely fine because it's a bet, it's a gamble. But if you're in a structured process of trying to trade, then it's very difficult. If you lose money, your mentality and your mindset becomes terrible, and you go into a downward spiral because you think you're trying to run it as a business and run it as a competitive. Run it as an actual trading structure, and you're losing money, which gets you disheartened. Where if you have an entertainment side of gambling, it obviously works okay. As I said, it's slow and steady progress, and it's basically running a business. So you have to treat it as a business. No one, overnight, Microsoft, Twitter, the next day is a multimillionaire. It takes them a very long time. They're structured, they have discipline, they have routine, and they can actually move themselves to basically, being successful over a long period of time. And also, you'll always be learning. Sorry, didn't it? There we go. There we go. Yeah, we're back. Anyway, it's about education. You're always learning. You're always going to be reading stuff. You're always going to educate yourself. And again, there's a terrible part of our industry that thinks that actually that we can, learn how to trade and that's it. But it's not the case. You will be learning all the time. I'm still learning. I look at a new trade pattern in technical analysis every day, and obviously try and work that out and try and get into my trading. So it's, it's a process. Everything is actually a process. So I should take a water.
It's quite warm, isn't it?
It's very warm.
The air conditioning. Well, I don't know. Yeah, it's just
Is that the air conditioning vent there? The yellow thing?
Is it?
Must be, yeah. Is anything coming out of it?
no.
Is it projectors?
No.
So we're gonna talk about mindset, and again, this is such a huge topic. I can't do justice within 10 minutes. We're gonna talk about it. So you need to go away and research this. But your actual mindset of your trading helps you deal with tough times. It gives you a platform to basically help you trade. So what does that mean? So basically, it relates to emotional regulation, and your emotions are actually really important. Again, people say you can't trade, they say get rid of your emotions, trade without emotion. Again, completely wrong, because we all have emotions. You can't get rid of them. You have to be able to understand them and use them within trading. And then you have to have response control. The reason that's very low. And basically, when you understand your emotions, you have to have a response, and you have to control that response for when you're actually in trading. And then from that response, you have to have a deliberate decision making. So you have your emotion when you're in your trading, you respond to that emotion, you have to control that, and then you have to make your decision within trading. And that is basically the importance of a mindset. As I said, emotions, let me just move on. So only 36% of people actually can accurately identify their emotions. So I've worked with a guy called Steve Ward, and Steve Ward is probably the best trading psychologist going. Look him up on the internet, Steve Ward. He's worked with the Navy SEALs, with the SAS. I think he's worked with a few Olympic committees, and basically he's helped me work through identification of emotion, dealing with emotion, the response to that, your decision making. Just a really quick story about that. So we're in, again, like this room, a seminar, and basically he put like an ECG thing on my ear, and it put in your lymphatic system, which actually is your nervous system. And basically it does this, and as you get stressed, it does that. And basically, through techniques that he teaches, you can actually physically move your lymphatic system. So this is stress, you move it, now that's not stress. And he can physically demonstrate that through the physiological of the body. So again, emotion, mindset, controlling is obviously really important. So it also leads into the topics of belief, principles, rules and habits, which now starts to feed down and filter down into the actual mindset of discipline and routine and control. So within mindset you have your beliefs, and your beliefs can be world held beliefs, they could be trading beliefs, they could be anything basically. So basically it's beliefs. So you have to sit down and you have to work out what your belief system is within trading. Then that turns into your principles. So they turn into your general rules of trading, what type of trading you'll be. Then it moves down further into rule-based trading. So, I will always have a stop loss, or I will only trade on a Thursday, whatever it turns out to be. But obviously it goes back to your belief system. And then that turns into habits. and you get habitual trading, and your habits basically turn into results. And this actual process is, if you're getting bad results, well, then you have to go back to your belief system, and you have to work to say, well, okay, well, maybe it's not working, or maybe your beliefs are hard and fast, so maybe you need to change your principles and rules, or maybe you've not got into the habit of them yet, so that's why your results are bad. So you need to go through this process from your beliefs. And again, that's why trading is so difficult, because you're talking about your held beliefs. Everything from are you conservative, are you Labour, are you environmentalist? All these belief systems that you have will actually influence what you think about things and how you trade. So it's interesting to get into. And then, right. And then I also just wanted to mention a technique that Steve Ward taught me. And basically, this is a process that I've got into about pausing. I pause all the time through my trading. Again, another industry misnomer is that you have to rush to trade. You always have to trade. Rush, trade. Absolute load of rubbish again. You need to stop and pause throughout your trading process, throughout it. And basically, this is what I use. Stop, breathe. Again, it gets it a bit more deeper because you actually breathe thinking about it. You notice, and that's noticing either your emotion or your breath. You reflect on it. Okay, I'm feeling really stressed because my trades are going terribly. And then you respond. And just this step of this pause just really helps me throughout the process, through analysis, through before I trade. Before I press the button, I always take a pause, because again, the industry tells you, oh, you're going to miss that entry. Again, and I know obviously people probably know this, but it's an absolute load of rubbish. You just need to take a breath, go through, whatever works for you, as we discussed, and then trade. So that section is basically so important about mindset and emotion and dealing with trading, and I just basically skipped over it. But you need to really, look into it and work it out. I had a really interesting conversation the other day about money versus pips with somebody, which actually put this slide into this presentation. And basically, trading is so difficult in the sense of it contradicts itself all the time. So we're all here because we want to make money, right? Obviously. But actually, in your day-to-day trading, you shouldn't look at money. Money is emotional. Oh, I lost £10. Oh my God, I lost £100. Well, I made £1,000. Emotional. So you want to make money, and you want to think about money, but you can't think about money. So that again is an example of why trading is so difficult. And basically the conversation I had with the trader was that it's a money game, and it's not a performance comparison. But you can't treat it like that in the day-to-day. So basically what the discussion, which was really geeky, but what we got into, if the market's down 15%, and this is where I think it's interesting from where I came from to where I am now, sat as a money manager in essence. As you can see, if the market's down 50%, I'm down 1%. I'm a great money manager, but I failed as an independent trader. It doesn't matter what my comparison is to the S&P. Who cares? My asset manager probably cares, but none of my clients do. I don't care, because I obviously trade my own money. So I think it's a really interesting point that you have to work out how much you want each month, and again, your belief system of how much you want, how much is your mortgage, what are you saving for. You have to have your goals within money terms, but actually in the day-to-day, you can't think of it. And it leads into your strategy, because if you're money orientated, I'm telling you, you will lose. Because it's too emotional, you'll get caught up in the money, or I can buy a car, or I can buy a holiday, or I can buy a coffee, whatever it may be, and that will trip you up. And then it leads into your strategy. So the strategy, again, I've skipping over this so quickly, but your strategy is not that important. The important bit is basically all the psychology and all the mindset. And what happens to people is that they think their strategy is the most important thing in their life. And when it goes wrong, they go, okay, well, I need to change my strategy. Or you don't, because you need to change your mentality and your mindset. And what happens is, what was happened to me, you have your strategy, whatever that may be, X crosses Y and I sell. You make money, you lose money, you change and tinker your strategy, then you have massive doubt and you throw it out, and then you repeat the process. And as they say, the definition of insanity is doing the same thing and getting the same results. So strategy is not the most important thing. You need to go through this process that we discussed about beliefs and what type of trader you are, and risk profiles, and do you like 4 hours or 15 minutes? Do you like stocks? Do you like Forex? And you bring all that together like a business in a business plan. You work out what you want to do, when you can trade, the discipline, the routine, which we'll get into, and then you move forward with your strategy. And if you get to this level about it loses money, then you don't change and tinker your strategy, you change and tinker everything else we just discussed about mentality and mindset. That is what's going to make you a successful, consistent trader. And again, anyone can be successful, not many people can be consistent. And obviously leading on for that, there's absolutely, which I'm sure you all know, no Holy Grail strategy. People telling you on the internet at seminars that they have a strategy that works all the time, they can make you all this amount of money. Again, of course, some strategies work some of the time. Consistently, not. The strategy that will work consistently is yours, that you've come up with through all your mindset, through your working on what you believe and what you like, and that's what's going to be your Holy Grail, not some guy off the internet or in a seminar telling you he can make you £100,000 if you do X, Y, and Z. It just doesn't work. And I think, again, leading back to my progression into the industry, coming from self-taught basically, and trying to find out the best way to make money, because obviously I was trying to earn a living, not become a money manager. All the guys in the city, none of them have strategies. They all sit there and basically they are technical analysis, they're fundamental traders, they're sentiment traders. So yes, so they have a discipline and they become an expert in their field, but they don't have a strategy. I don't know anybody that if X crosses Y, you always sell and it works. Now, there obviously are system traders out there which do well. I actually know one very well who does really well. But actually, it's changing. The most important thing for him as a system trader is he's got all his systems, is turning them on and off. It's not the actual system, it's which one's on at the exact time. And again, Holy Grail is just now then, it really annoys me because our industry is just terrible with all these people saying that you can make all this money and this system works, and it doesn't. And I won't mention names, but I know quite a few people and personally know people who have actually sold systems that they've just literally made up. There's one guy that I know, and I inner sanctum know him, and basically he just sat down one day and went, I'm just going to make this up, yeah, just cross here, and I'll do that. And he made 8 million quid from just selling that system and certain variations. And I know for a physical fact, because I was in the room, that he made it up. And then obviously I've never spoken to him again because that is absolutely terrible. But yes, so the system, there's going to be the Holy Grail, is yours, it's nobody else's. And trading is so personal, and I hope again, this touches on it, that it's just inconceivable that basically a strategy you will find on the internet or through a seminar or through whoever, it's going to fit you. It just can't. It's like a million to one that you're going to find a strategy that works for you in the room with 100 people, and there's another 100 to one that strategy is actually going to physically work in the markets. So it's just astronomical. there you go, down at the bottom. Anyway, and the final thing is basically, obviously there are educators out there, and you know, some are good, some are bad, obviously, with everything in life. But even if you find a good educator and you like them, and you like the way they trade, you know, and they help you, I would say never ever blindly follow. The point of finding an educator or a signal provider is to turn around and go, well, do you know what, this person actually works similar to me, you know, they're on the 4-hour chart, they're going to do a few trades a day, and you dovetail it in to your own trading. So you have your own trades on, you do your own thing, and you integrate their trading into yours. And the other point is that you don't blindly follow their trades, you have to analyze their trades. Oh, why is he putting that on? Or why is she putting that on? Oh, I understand that. Oh, actually, do you know what? I don't understand that, so I'm not going to put that trade on. You have to understand what they're doing, and that understanding will make you a better trader. Because, again, it still happens to me today. I put a trade on this morning, and I'll name names. Blake Morrow, who's probably one of the best TAs out there, and 2 hours later came across my desk that he put the same trade on. And even I was like, yes. Because I was like, he saw that, I saw that, I understand it, we have the same trade on. Again, we won't get into self-fulfilling prophecies of trading, but you know, it's a really nice feeling when you actually understand the trade that they've put on. Because you know, they've probably got a bit more experience than you. Well, Blake Moore's got loads more experience than me. And for when I see he's seen my trade, I'm like, whoa, you know, it's reinforcement that I'm doing something right. So, you know, you always have to understand what they're doing. And, you know, finding educators and following people is obviously still great, and, you know, it's all absolutely fine. But you can't blindly follow them. Going on eToro and just following someone, you'll lose money. Because you don't understand what's going on. And why would you ever do that in life? You never just give someone money because they think they're good at something. You know, need to understand it. So again, our industry is a bit terrible because they basically think that you just give them money. So we're coming to the end, and this is probably, I use this slide quite a lot on the webinars I've done for Pelican, and basically it shows what I think is the most important thing within trading. Obviously we have the psychology, then we have all the discipline and routine, then basically we have the actual strategy, then we have the actual trading, and then we have the results in the middle. But basically, as I said, routine and discipline are the most important things with patience, which we'll get into. And what that means is that whatever lifestyle you have, wherever you want to trade, whatever you want to do, you have to have a routine around what you get into. So firstly, as it says, it's your safety net. You know that if I'm going to trade in the morning, this is what I'm going to do. And if you don't have that opportunity in the morning, then don't trade, because routine is all important. You know, if you don't feel like you don't want to trade, well then don't. You don't have to trade. As I say, it's your safety net. Your routine of when you trade and how you trade is actually your safety net. Affirmations are on there. So I write down 2 or 3 affirmations 15 times in the morning. And they're not, I want to make £1,000 a day. They are, I will be a successful trader. Stuff like that. They are lifestyle and basically mindset orientated. They're not money orientated. But affirmations, you know, believe them or not, I believe that they reinforce my mindset, and that's why I write them down every morning. And you know, if you're disciplined and routined, the markets are repetitive and disciplined and routined, you know, most of the time. So basically, what, you know, why aren't you? You know, I think you should be. And you know, the planning of trading is, as I said, it just clears your mind, because you sit down and think, right, I know exactly what I'm going to do. And if you trade outside of that, you know it's not correct. So you have to have a plan around what you're looking for. It makes it simple, it makes it clear, it takes out all the uncertainty and all the difficulty, because it's difficult enough actually trading. So you have overall discipline. And what that means is you have consequences, because one of the things is if you're sat in your home office or your bedroom trading, well, what consequences do you have? You press the button, who knows? You could, I'll put this trade on. Well, you know, who cares? No one can see me. So I think there's 2 points with consequences. You can either have somebody see your trading and basically be looking over your shoulder in effect, which I have it with my asset manager. Before that, I had an accountability buddy who was Mark, and basically he had view access to all my trading accounts. Because you don't want to have to phone him up and go, you know what, traded outside my plan, or you know, oh, I'll put this stupid trade on. So I have a consequence where I just stick to what I'm doing. The other side is if you don't have anyone, or you don't want people to see, you know, your money, there's a consequence of, okay, well, I'm not going to go to the theatre this evening. I'm not going to have that beer this evening, because there's a consequence because you made a mistake in trading. So you have to have consequences. Again, like a business, you can't just do whatever you want in business. You've got a boss, or you know, you run a company and have responsibilities to employees. So you have to have consequences. And it leads on to basically a mistake sheet for me. So next to my computer, even now, I have a mistake sheet. And every time I make an error, I make them all the time, I write them down. And writing it down basically takes it off your mind, puts it on paper, so you can come back to it. And it also just makes it relevant and important, because if you make a mistake, you can just brush it off. Again, consequences. You can just completely brush off, you know, your mistake. Oh, I won't do that again. But if you write it down, it makes it real. And then I have also critical errors, and what that means for me is that I won't make that same mistake twice. If I make that same mistake twice, it's called a critical error for me, and it goes on my board as a mark against my name, basically. Because I make mistakes all the time, but I need the discipline and routine not to make mistakes again. So I try not to, you know, make them again. I think I've got 3 in the past, like 4 years of making the same mistake twice. And then the daily routine. And for me, again, they're all very personal, so you have to take away what suits you. But for me, I'm a bit OCD, so basically, and it's a bit embarrassing to talk about, but my routine next to my desk on a bit of paper: wake up at 5 a.m, think of 3 things to be grateful for, go to the toilet, cuddle the missus first, actually, then go to the toilet, put the kettle on, and it is that, for me, it's that discipline, and it is, you know, turn the computer on. And I may have gone a bit too far that now I can't trade without that routine. I don't know, it might be a bit too much. But basically, having a daily routine and having it written down so you know what you're doing goes all the way back to being your safety net. And if I sit down and, not if I can't turn the kettle on, I'm not that insane, but if I can't get to my computer because the kids are going nuts or something's happened, then I don't trade. Your routine is your safety net. You have to, have that in place to have the right mindset to go, do you know what, I'm in the right frame of mind. Again, even on the routine, am I in a good place today? Yeah, I'm good, fine, trade. And then, because all this filters down, so you have a routine, you have discipline, and then you have discipline within your trade. So that means you have your strategy, your principles, rules and control, and you're detached because you know what you're doing. You're trading within a plan. So you have to have a trading plan, you have to stick to it, same as you have to stick to your routine, same you have to have discipline within all this. And I say everything filters down, so focus within discipline, routine, filters down into what you do, filters down into your trades, filters down into your principles and your rules. So, never move a stop loss. Well, if you've started up here by having a crappy day and basically you're not in a right frame of mind and the kids are going nuts and, you don't feel happy, you're going to, mess up your principles and rules because it's human nature. You're just not in the right frame of mind. And then you start to get into control. So you go, I've made a mistake. Why did I make that mistake? Oh, it's because I wasn't in my routine, I wasn't disciplined enough, I wasn't in the right frame of mind. And then again, it spirals out of control. It's all about going back to being consistent. And all this leads into being consistent. That's the whole point of it, is basically to be a consistent trader. And it is last on here, but over the last about 2 years, basically, patience has worked out for me to be the most important thing trading. Patience within your routine. So am I, as I said to you many times, am I going through my routine properly? Patience in, okay, am I disciplined enough? Patience in the trade. Patience in waiting for trades to develop. Patience in waiting for, profits to run. So patience has become the most important aspect. It's business-like. You don't rush into anything. You think about it. You think about your behaviour. It's, as I say, it's all about psychology. And then it is the hardest aspect, though, to be patient. You are, basically hardwired to rush or to get into things, or put that trade on before I go out, or even for me, put that trade on because my asset managers, wanting an up month, or my clients are bugging me about trading. So it's very, very difficult to actually have patience. And everything I said filters down: routine, discipline, principles, rules, focus, and patience. All filters down into your trading, and basically that is the most important thing. And then finally, basically, I was thinking about a few tips that I do. So I actually have a calendar on my wall, just a block, and a winning day I put a green cross, a losing day I put a red cross. So this probably leads me a little bit onto my rant about letting the trades run and cutting losses. Obviously, if you have losses, you cut. Obviously, again, not easy to do because you want to let it run to your stop loss. Emotions get involved because you don't want to take the loss. So basically, it's difficult, but we all agree that cutting losses works. Now, people say let your winners run. I actually completely disagree, because I'm a structured trader. So as you can see, discipline, routine, patience, all that jazz I've just been banging on about. And when my trade gets near my near my target, I will take that profit, because I'm in a better emotional state to take the next trade. And if I let it run, I have emotional capital within that trade, and basically what that means for me is that I can't do many more trades because I'm too worried about, oh, it's gone up a bit, oh, it's gone down a bit, oh, it's gone near my stop loss, oh no, I made really good profit. What was the point when I already had some pips in that trade? So as it gets into profit, and as it gets to a point which again is down to your personality and beliefs, and you think, okay, I'm going to profit, get out. And then the next time you trade, you're in a better position, you get into your trade, get into a bit of profit, get out. But obviously some trades will eventually run because the market just moves. Boom, it's dropped 100 pips. Brilliant. You've now, you've one of your trades in that week actually has turned into a trade that's run. But for me, I just don't see the point of having trades on that run. And again, it's all going back to being consistent. I know many traders that let all their trades run. And again, one springs to mind, and he's just so mental about his trades. Have been on for a week and it's up, it's down, and then he's put another trade on in the meantime. It's gone wrong because he's not thinking about it properly because of the other trade. So I just don't get the process of deliberately letting your winners run when the market will let your winners run eventually. So you need to cut off your winnings and just accumulation, just pip accumulation, a little by little. Again, it goes all the way back to expectations, because your expectation is you're going to do 1,000 pips in an hour. No, do 25, do 10. It's about accumulation of winning. And if you sit down and go, but you know what, I've only made, even if it's 1 pip, it doesn't matter. I've had 5 winning trades in the bounce. It doesn't care what the pip is. It's just perfect because you are now consistent. Then you can think about the money. Then you can think about what you need to live on. It's that process. Again, I mentioned the mistake sheet. Just the most important thing next to my desk. Writing it down, taking it off your mind, making it real, making it tangible so you can actually feel the mistake and then rectify it after you're trading, I think is just one of the most important things. A trading plan. again, I'm sure everyone all knows this, but you have to have a trading plan. Trading outside of your plan is just insanity, because it leads on to relating back to the winning and losing days. Because I was just actually saying to Peter upstairs, I was speaking to a trader about, it was actually over Twitter actually, he was saying that basically if you're in a winning mentality and you've had 5 winning trades in the day, keep going. Why stop? You're in the groove, you're trading away. And I said to him, I disagreed with him, because I said to him that you are then trading outside of your plan. What you should do is stop when you've hit your targets, your goals for the day, for the week, for the month, and then you take that winning streak, then you take it into your next plan. You don't just keep going, because eventually you'll keep going, you'll have 20 winning trades, it'll be amazing. The next day you'll have a few winning trades within your plan again, and then you think, well, do you know what, I'm going to do it again. Well, then the next 15 trades will be losing. So and then you get into chasing, and then you get into bad mindset. But if you have a winning mentality within your plan, and then you have a loss within your plan, you can analyze it. You can go, do you know what, okay, had a bad day, but it's in my plan, so I can sit down, I can journal, I can work out what went wrong. But when you're outside of your plan because you're on a roll, and then it all goes terribly wrong, how can you analyse that? You can't analyse that because it's outside of your plan. Well, I suppose you can analyse it, but it's very, very difficult to go, well, do you know what, I was on a roll, so just put this trade on because I thought it would work. And then when you go back and go, okay, how do I analyse that because it didn't work and I've lost some money? Well, you can't, because it's not in your plan. So, yes, we agreed to disagree. And then, yeah, it leads on to journaling. So, have the calendar, try and pip accumulate, have your mistake sheet, have a defined trading plan. And again, it's personal, so it doesn't have to be detailed. It doesn't have to be, really, really structured. If you want it to be a bit more loose, then that's absolutely fine. But have it that suits yourself, and then journal. Again, one of the most important things, you have to write down and note your trades. And at the end of the week or the end of the day, you have to go over and work out why it did well or why it lost. Because trading is not gambling, it's not guessing, it's not even educated guessing, it's structured, and you have to work out why you did things. And from emotion as well, how were you feeling when you put that trade on? What was the market doing? What time was it? You have to have all this information to work out how to be a structured trader. Because the markets are structured, you have to structure what you do into trading. And then basically that's me done. And a bit hot, obviously. So yes, sctrading.io basically is just one page that I flung up there. There's not much on there. It's my email address if you want to email me, and obviously I am on Twitter, where I do have quite a few Twitter arguments obviously with people about things. Again, not sure what it says ERM. Obviously I've got the trading group now with Pelican. It's free. I don't charge anything in there. And basically what you get in the group, because I'm relaunching it today, because obviously I wasn't really doing it. And the reason I'm relaunching it is because I sit and trade, I don't do anything else. I found it really difficult to integrate a bit of, not education, but a bit of content within the app within my day, because as you can see, we're a bit structured. But basically, the app will get a trade a day, it will get a trade report, which is what I give to the desks. So I do some technical analysis for corporates and for prop houses. It's exactly the same. So that will be on there. And then there'll be I'll write some articles about trading, I suppose. But it'll be a trade a day, and there'll be the actual report that I send out to the prop houses and to the corporates. So I'll just put that on there as a link. And that's basically. I hope it's been a bit helpful. Obviously my first one, so I feel that I glossed over quite a lot, and I could stand here for days and basically talking about each individual section. But yeah, trading least important, mindset most important, psychology most important, strategy not that important, and it's personal to you. That's basically the takeaways from it, to be perfectly honest. Perfect, thank you.
Thank you, Simon.
Any questions, of course, I'll try and answer.
Yes. What do you mainly trade? Is it just currencies? Or do
Just
you do
currencies, yeah.
equities?
Spot FX, bit of gold. Bism a TA is what I found to be structured. Stocks are too cappy. I do trade no exotics, so it's only crosses and majors. Yeah, gold because it's obviously very structured. I don't trade oil because again it's too related to fundamentals. Yeah, no stocks because obviously they get too much. And yeah, just Forex. So yeah, traditional technical analysis, there's pattern recognition, looking for triangles, head and shoulders, double bottoms, and then using actual price to determine what happens. So you need a pattern, say you found a descending wedge, and then you need actual price action, various engulfing, X, Y, Z, to get me into the trade. So it's about building a picture. So I start from like the monthly chart to work my way down, about it's like a jigsaw puzzle, putting pieces of the jigsaw together, and then basically that gives me the idea to trade. Again, very disciplined, always got a stop, always got a target, always got a reason. Everything's got a reason that I do to put the trade on. And then again, patience, take a pause, check everything's correct, put the trade on. And then as soon as it's in profit, when I think it's at a technical level or a reasonable amount of time, I take the profit. A great example today, the Blake Morrow trade was long cable, and look what happened to that. It absolutely shot down. But I got out of that because it went up to a good level. I thought, you know what? I think it might have been at 80 pips. Don't even look. And I just got out, and then in that hour, it absolutely bombed. Which I know is a hindsight example, I completely get that. But if you have that mentality, that works more often than not. So Forex mainly.
Yeah, but when you say stocks, are you talking about individual stocks or indices?
Or either. For me, the technical analysis doesn't work enough on it for me. As a TA, I can't. Indices and individual stocks just don't. Obviously, you can use TA on them. But, technical analysis works, and you'll see head and shoulders and what have you. But for me, from my personal point of view, it doesn't work enough of a time for me to be consistent enough. Because I think, I know it's a very ballpark figure, but I think on Forex, 60 to 70% of the time, if you can spot a descending wedge or a head and shoulders, it works 60 to 70% of the time. Now that doesn't mean that you'll make any pips, because trading it is obviously the art of trading, which I didn't even touch on, is very, very difficult. But the overall strategy of seeing something, I think works roughly about that amount of time.
Yeah, I mean, when you talk about a strategy and then at one point you're saying don't change it and all that, but to begin with you've got to put together a strategy, and you've got to have something that works. So you have got to change it, haven't you? Because when it's not working, you can't carry on losing. You've got to change it too.
Yeah. So what I think of that is that yes, of course you are always going to be, I say, learning, evolving your strategy. But your strategy is not the first place you look, because if you've just gone to the internet or to a seminar and they've gone, this is my strategy, you take it away and you use it and it makes money then or doesn't make money, and then you tinker with your strategy, well then it's never going to lead to being a consistent trader. If you've sat down and gone, okay, what sort of trading do I like? So for myself, TA, FX, majors and minors, price basically always tells me what to do, so that's the most important thing for me. Price action. Okay, I'm really happy with that strategy. That's what I like. And then if it's not working, then it's not the strategy I change first. It's all the mentality side. So it would be so when my strategy wasn't working very well, I found Steve Ward, and we did the risk compass and see what type of risk I was. I actually, worked well with, and actually coincidentally, the risk compass actually worked well with what I was physically doing. But I was in the room with some actual prop traders, the one guy had 90 seconds. So there's a few guys there. One guy next to me had 90 seconds to make his decision on what he was doing. He was a market maker and a speculator. He had 90 seconds. And when we all did the risk compass, which, if you're not too familiar, I can get that passed on to you. Basically, it just gives you your appetite for risk profile, basically. And he was like, I love what I do. And I said, I love what I do. And we were like, well, hope we, match in our areas. And in the compass, I was that side and he was that side. Well, there was 2 electricity traders opposite me, and you could tell by their face what they did in their job was not their personality. Now, that obviously doesn't mean that they won't be successful, but it means they have to work harder at it. So anyway, so yes, of course, so what I was trying to say, the strategy, if you've come up with it and you're happy with it, and even if you have bought it off the shelf and you love it, it's fine, but you need to change everything around it before you turn around and go, that strategy is not working for me. What I was trying to make the point, maybe it didn't come across very well, is that you don't just first go, right, get rid of that strategy, let's do something else. Okay, no, it's not working, I've lost more money, let's get rid of that strategy, let's get another one. What you should do is you should take a step back and do everything around that strategy, and then see if it works, and then if it doesn't, then yeah, of course. And also, you're always slightly tinkering with it, but from the psychology of a good point of view. You're not changing your strategy or tinkering with it because you keep losing money. You're tinkering with it because you're happy with your mentality and your psychology, and you're just tweaking it to make it better, slightly different. Trading slightly different over Christmas maybe, or not trading as I do. It's just I was trying to point out, don't just kick your strategy to the curb straight away if you lose money, because that's not what's wrong with your trading. It's not the strategy.
So typically, what time passes between you identifying a trading prospect to you performing your analysis, then identifying your strategy, and then entering the trade? It sounds like you do quite a lot of upfront preparation work before you.
Yes, so I'm up at 5. I'm between 5 and the open doing analysis.
Okay.
Again, it's a complete mixture because it depends on the market. So if I'm doing some analysis and I see something moving, then obviously I take my pause and I'm patient, but I might get into that trade straight away. Obviously, which I've personally discovered is that you get pre-open movements, so you can think, so you're going well, get into a trade, it's going really well, opens, it goes the opposite way. So again, you have to take that into consideration, and again, that leads all back to taking profit. So if I'm at my desk at 6:30 in the morning, I'm doing some analysis and I see something, I'm like, I say I'll get into that trade now with all my pauses and all my caveats, and then it starts to do well. Before 8:30, I'll get out of that, because 9 times out of 10 it will reverse and I will have lost money. But again, why hold that trade over? Now we'll probably go back to where I thought, but emotional capital, why not, before I've even started the day, made some pips? Brilliant. And then we'll see what happens after the open, a few hours. So yeah, so it's a mixture, but there's a lot of preparation work up front.
But most of it's actually on the day itself, before the before the market opens.
So the market determines what I do. So if I pattern recognition see something, then basically I will let that happen. So that could happen in the morning, it could happen not in the evening, but it could happen later in the day, and then they'll be re-evaluating it, how is this doing? So again, the market determines what I do. Again, that leads back to the pip accumulation side, where the market tells me what to do. If it tells me, do you know what, this is not working, well, I'll get out of it, or leave it alone, so.
And is it purely your own analysis, or do you have any outside information feeds?
No, pure. So when I first started, of course, I looked at Blake Morrow, I looked at Jason Sen, I looked at Nicola Duke, I looked at Clive Lambert. Of course. But again, it's the process of, you look at what they do, you take it to your own charts, you analyse it, think, do I agree, do I disagree, do I understand? And then you put the trade on or not. And then as you get further away from that learning point, you're doing it yourself. And exactly, so what happened to me today with Blake Morrow, he effectively didn't see my trade, obviously, but he copied what I was doing, which obviously reinforces, makes me happy. So yeah, it's about understanding. But yeah, there's absolutely nothing wrong with following people, because they have all the experience. You know, they know what they're doing. So you just have to understand what they're on about. So.
But when you first start in the morning, so you look at the charts to see what's been happening and all that. But
Yeah.
what's the first thing you would look at? You would look for a technical analysis to see that something's done a double bottom or something like that.
So I have monthly and weekly charts printed off. I don't know why, I just like the paper, having it next to me. I'm not a massive fan of having it actually on the screen. So I'll have the monthly and weekly charts in the folder. I'm sad enough to admit that I carry that about with me, you know, on the toilet, on the bus, and I'll just be looking through the charts to get an overall picture of them weekly, monthly. And then when it comes to my mornings, I'll be on the daily 4-hour charts, are the two I mostly trade off. I feel hour, sometimes for entry, but hour 15, anything under, I just think it's too noisy for my technical analysis approach. And basically, yeah, then I will be having a sentiment view, I suppose you'd call it. So say, I don't know, say on cable it's down, so you have that sentiment, and then you look on the hour to the 4-hour chart, and then it'll be, yes, exactly right, looking for patterns, double bottoms, trying to see what's going to develop. Yeah, and then, you know, then obviously it depends how price reacts and leads me into the trade.
So do you use any particular indicators? Have you got any preferences or?
No, so again, for me, I think indicators are a load of BS in a sense. It's about building a picture. Price is the only thing that's important to me. But I do have stochastics on my chart, basically. That's obviously to give a lagging indication. And I have 2 moving averages. And that is 100 and 200, and that is it. I don't have anything else. Because I just, personally, and I know, you know, there are so many out there, but I just don't think they work, personally. I don't think they work enough. And I think how they're applied to the market towards the retail trade of, you know, if you look at this indicator and this does this, you can get into X amount of trades, I just don't think works. I think pure technical analysis has been working for over 30 years. It's self-fulfilling, obviously, within the market. Only I can see my own trend lines or fibs on my own chart. No one else can see that. So having, you know, I don't know, the arrogance to think because I put a fib on, if it breaks the 23, it's going to go to, you know, it's going to go higher. I think is ridiculousness, because no one else can see that. So I think price is the most important thing, because price tells you what to do, in my opinion. So yeah, I don't use any indicators.
I'm sorry, on what time frame do you draw your fibs? Is it on the daily?
On all of them, and
you only use the daily and the 4-hourly.
that's where I trade from. But if there's a fib, I put fibs on monthly, weekly, and daily, and a 4-hour. And on that point of Fibonacci's, it's again, my technical analysis approach is that it's not textbook. So I'm not in an academic situation. I put my fibs to fit my charts. Everything on my chart has to work. And you know, so a fib obviously should go from the high to the low. But if I put them on and it completely is irrelevant and doesn't correspond to the support and resistance levels of the market, well, why are they on there for me? It just doesn't make any sense to me. So I'll take them off, and okay, I could redraw them, you know, at the actual start of the move, which might not be the exact low. But if they fit, then they're a benefit to me. Everything on my chart benefits me trading to make pips, to make consistent profits. It's not an academic exercise. And again, that's why I found it a bit daunting going on Pelican and giving out my trade reports, because you know, if Clive Lambert, who's a proper TA, looked at my chart, he would probably think, sure, that's not technically correct. You know, my trend line's not got 3 points, it's not trend price and X, Y, Z, but it's got to be relevant to me making pips on my trading. That's the most important thing.
So what horizon are you looking at over the trade? As in, are you thinking you developing a return over the long term, or?
So again, the market determines what that is.
Right.
So
you don't tie yourself to any time periods.
No. And again, I hate the term day trader,
Right.
because why give yourself emotional anxiety that you have to be able to drive it at the end of the day. That trade may continue, you know, for a week, who knows, you know. And again, if I've started on the monthly chart and I see a massive head and shoulders, then it would be a monthly trade. Trade size, most important thing, reduce my trade size if it's on a high time frame. I think my best trade ever has been the head and shoulders on pound yen, which was a few years ago. I think it's off the weekly chart, and obviously that took a few weeks to run, so sorry about that. Yeah, so the price, again, market determines what happens. And trade size, I would say not mentioned, trade size is the most important thing. Small trade size.
So do you have one trade size that you use, whatever?
Yeah, risk management, again, we've not been in half of this stuff. Risk management, money management, it again is more important than trading. So it's about, so I have one trade size for the 4 hour, daily 4 hour, you know, chart I'm looking at. If I'm off the monthly or weekly, obviously I reduce the trade size a lot. My trade size is small, I only risk 0.5% of the whole account on each trade. And then obviously that is, you know, relative. So for example, and again I'm jumping about, maybe I'll explain this very well. Risk management, money management, small trade size, 0.5% of the account. But my stop loss is determined by the market, not by the size of my account. Again, I feel that's ridiculousness, because who knows that I only need to make £50 this week, or, you know, £100 this week. It's irrelevant. So the market tells me where my stop loss is. If that's 50 pips away, my trade size will be relevant to that 50 pip stop loss of 0.5% of the account. If I think actually I need a bigger stop loss because the market's moving, or, you know, for whatever reasons, and it's 100 pips, well then my trade size is half that amount. So it's really important that the market decides where you put your stop loss, not where your account needs to be, because nobody knows that. And then just on the point of the market, if you have a support and resistance level, don't put your stop loss dead on that support and resistance level, because that's when you get into conspiracy theories of stop hunting, which again is complete BS. There's no broker out there going, oh, people have put their stops in, I'm going to do this. What they do is go, well, okay, everyone's short cable at the moment. Oh, look, there's a horizontal support and resistance level where every idiot's going to put their stop loss there. That's what they do, because it's obvious. So you have that a little bit higher, a little bit lower, you know, around the area that you want. And yeah, you still may get stopped out, but that's no one specifically hunting you to get stopped out. That doesn't happen, in my opinion. So.
That's great. Well, thank you very much.
Yeah.
I'd just like to thank you for an excellent talk. I mean, there's all kinds of things you can take from it. What I took from it was a really interesting insight in what it takes to be a professional trader. And I think Simon's approach is exceptionally interesting. I think I'll be following his advice, maybe not waking up at 5 a.m. That might be beyond me. And secondly, I'd like to thank all of you for coming along.
Thank you.
Really great to have you here. For further, so we are an app, so we're not sort of a company that just runs excellent presentations. We have an app called Pelican Trading, where it's the best way probably to stay in touch with Simon, and I'm sure you'd answer questions in the group.
Yes.
If people would join, it's free to join. His group's called SC Trading. So it's about, if you haven't downloaded it, I wouldn't be doing my job properly if I didn't tell you to download it immediately on your smartphone.